and we'll need to pay attention and see how to speak to this unit very practically. Okay, so in the unit 4, we'll be speaking to agreeing the terms of audit engagements, and the first unit will talk about the objective of the engagement letter, very important letter. We'll talk about the content of the engagement letter. We'll look at the annual review of the engagement letter. And the last section will be speaking to acceptance of a change in the terms of the engagement. All right. Let's look at the first section, the objective of the engagement letter. What is the objective of the engagement letter? Essentially, the objective of the auditor, as per ISA 210, speaking to agreeing the terms of the audit engagement, is accept or continue an audit engagement only when the basis upon which it is to be performed has been agreed by the auditor and the auditee. This is very important. So the engagement letter serves as the written contract. It's a written contract, a written agreement between the auditor and the client. And as per ISA 210, agreeing the terms of the audit engagements follows that the auditor's objective is to accept or continue the audit basis upon which the audit is performed. So there has to be a clear agreement, and the agreement has to resonate with both parties on the basis of which the audit will be performed. It's important because it ensures both parties understand their respective responsibilities in writing. This is key. And this is important because it reduces the risks or the risk of misunderstandings during, after, before the audit. And it clearly mitigates against any disputes that will arise. So written agreements are very important. It matters also, this writing, because it provides a reference point if a disagreement arises later or during the audit work. It's important also because it forms part of the quality management process under practice management, and the current dispensation on ISQMs. It's very important to have your engagement letter documented. So for example, if an audit firm is engaged to audit a mining company where currently I work in the mining space, and the engagement letter will clearly state, number one, that the auditor's responsibility is to express an opinion on the financial statement. And the management's responsibility, for example, is to prepare the financial statements and also provide access, staff, documents, information to the auditor. So the scope also of the audit, for example, it should cover a particular period. So for example, covering the year ended 31st December 2024 under the IFRS jurisdiction so this is an example of an engagement letter and some of the contents. So without this agreement, the audit firm or the auditor risks being held accountable for duties that are not theirs or stipulated in the engagement letter, or facing disputes about the scope of work and the fees. This is very important. So we need to take note of this briefly, because the engagement letter is one of the fundamental documents in audit practice management. And we've seen, based on ISA 210, that the auditor's objective is clear. We should only accept or continue with an audit when the terms, the basis upon which it will be performed, are properly agreed between the auditee and the auditor. So you may ask that why do we need an engagement letter? It's very clear. It's to set out in writing the exact terms of the auditor's appointment. It's very simple. And it's to make sure both parties understand their responsibilities. That is the auditor's role versus the management's role. It's clear. Another need, why do we need the engagement letter, is to reduce the expectation gap. The expectation gap, speaking to what clients think auditors do and what auditors are actually required to do. Some clients think auditors should detect fraud. No, that's what they think. But what auditors actually do is to provide an opinion on the financial statements. So, for example, a client may assume auditors are responsible for fraud detection. Of course, most clients assume so in all cases. But the engagement clarifies that the auditor only provides reasonable assurance, not absolute assurance, not a guarantee of fraud prevention. So that expectation gap must be bridged very importantly. And the objective of ISA 210 is clear, is to ensure there is a clear mutual understanding of the terms. That's a simple objective of the ISA 210. And also formally document the scope, the objectives and limitations of the audit in the engagement letter is a key and core objective. Also provision of the contractual basis that protects both the auditor and the client. Another objective is reduce disputes later by clearly stating the fees, the reporting deliverables, and also the responsibilities of both parties. So imagine you begin an audit without an engagement letter, and later client disputes the audit firm's fees or claims. You are supposed to do audit tax work as part of the audit. So if a client is saying that and there's no documented engagement letter, how will the auditor defend himself? You are supposed to do statutory audit, and the next thing you're asking for your fees, and the client is you didn't help us remit tax or compute our tax. It's not part of. So an engagement letter is very important to provide clarity on the scope, what the auditor should do and what is not to do. It's clear there. So in practice management, it's important that the engagement letters are part of good risk management practices actually for audit firms. They are part of good risk management practices for audit firms. So they ensure compliance with professional standards. And the engagement letter serve as an evidence in case of regulatory or legal disputes. It's very key. So for AAA exams, scenario-based questions, case studies, we may be asked to state the objective based on a case of an engagement letter as per ISA 210. And also several case studies we've seen on how this letter reduces the expectation gap. So our recommendation or recommended steps should be when clients request additional work not covered in the original engagement letter, you should be able to bring out points stating the objective clearly. And the engagement letter actually is not just paperwork. We must understand that it's the foundation of the audit relationship. It ensures clarity, it protects independence, it reduces disputes, and keeps both the auditor and clients aligned and focused. So always remember, no engagement letter or no clear engagement letter, there is no solid audit. Always remember that. This is very important. So take note of that. Any questions based on the content or based on the objective of the engagement letter? Any questions, any clarifications? So we can run to the next. Any concerns, any contributions? Okay, let's run. I would like us to finish this so that in the next class we'll run into questions and answers. All right, so let's look at section 2, speaking to the content of the engagement letter. The content of the engagement letter. The engagement letter sets out the key terms of the audit engagement, and it ensures clarity between the auditor and the management. So typical contents, like we've spoken to, speaks to number 1, the scope of the audit. So you need to ask what the audit will cover. So for example, financial statements for the year ended 31st December, blah, 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 conducted under this applicable framework, ISA, IFRS, or if it's in the US, the GAAP. So the scope should be clearly stipulated in the engagement letter. Number two, the responsibilities of the auditor, which is clearly to obtain reasonable assurance that the financial statements are free from material misstatements, and also to issue an independent audit report. That is the clear responsibility of the auditor. And number three, the responsibility of management is the preparation, presentation fairly of the financial statements. Another responsibility of management clearly is to implement internal controls. And number three, providing access to information, records, staff, personnel for the audit. And number four, the applicable framework. The financial reporting framework used should be clearly stated, whether it's the IFRS or the US GAAP, and that will be the basis on which the opinion will be issued. Very key. And also, in the engagement letter, the form and contents of the report should be stated, because the expected form of the auditor's report is a standard opinion referring to going concern issues, whether the company will continue in the foreseeable future or not. So the form and content of the report is the fifth and not the least content that should be covered. And this matters because the element this aligns the auditor and the client clearly with their responsibilities, and it ensures users and management don't wrongly assume the auditor's role, which should not go beyond providing reasonable assurance. Very, very key. The auditor's role should not go beyond providing reasonable assurance, which a lot of people, a lot of users, public have misconstrued. And there's a gross misconception on the duties of the auditors. And the engagement letter, the content should address this gap very, very clearly. And until auditors take the content of the engagement letter seriously, signed, stamped by the auditee, then this expectation gap will always be there. It will always be there. So the engagement letter is more than just formality. It's a contractual agreement that guides the audit process. Very key. So like we said, the scope of the audit, the responsibilities of both parties, the applicable framework, the form and contents of the report should be still clearly stated because it matters. We should, the audit, the engagement letter ensures there are no ambiguities in the audit client relationship. And like we saw, it reduces the expectation gap, clarifying what auditors will do and won't do. So they provide the engagement letter provides a reference point in case of disputes. An example, for example, if management later insists that auditors are responsible for preparing financial statements, of course, the engagement letter protects the auditor by showing that management is responsible for that. So there are also other items, often not included, but should be included, basis of fees and billings. The billings arrangement should be included also. Reference to compliance with ethical requirements, like for example, independence should be referenced in the engagement letter. I've read that of the Big Four, they have this inclusive because they are very detailed, most of the Big Four firms. Also, other items hopefully included access to information and cooperation expected from management. And also limitations of the audit are also included, speaking to reasonable versus absolute assurance. There is no absolute assurance. The reasonable assurance is the best that could be provided in an audit. So ICAN examiners often test these areas actually by asking students, maybe in a scenario, on the content of the engagement letter and to explain how it helps reduce disputes. So our answer, or a good answer, should touch or must touch around the scope, responsibilities, the framework, and the reports. This is very important. So conclusively, or in conclusion, you see that the content of the engagement letter is essentially the roadmap or the blueprint of the audit relationship. So if the audit firm properly drafts this, it minimizes misunderstandings and actually protects independence. And that letter helps both the auditor and client to focus on their respective responsibilities. It's very important. So always remember that a well-drafted engagement letter is the first defense against the expectation gap. It's the first defense against the expectation gap. This is very important. Okay, so that's a brief explanation of the contents of an engagement letter. Do we have any questions? Do we have any contributions, any observations? I'm trying to run so that we should finish up this before 10 o'clock. Any questions? Okay, if we don't have any questions or contributions, let's look at section 3, speaking to the annual review of the engagement letter. The annual review of the engagement letter. So the engagement letter should be reviewed annually, or where it's reviewed annually. The auditor needs to check if the terms need updates or not. So the annual review, where the auditor is carrying out the audit after 1, 2, 3 years, he needs to check if the terms need updating. An engagement letter is usually agreed at the start of the audit or the engagement, and the auditor should do it. It's specially advised to be renewed annually to ensure it's still relevant with the times and the seasons that it's practicable. And the reasons for annual review include changes in circumstances over time. So, for example, change of ownership, change of management, or change in significant business activities of the client. So these are reasons for annual reviews. So the ownership of the company may change. Stakeholders, shareholders may have sold their shares or their ownership. So that could necessitate annual reviews. Also, change in management, directors, the agents of the company could necessitate that. And also significant business activities, maybe mergers and acquisitions have occurred, and several activities could necessitate a review. Very important. Also, changes in reporting framework, the adoption of maybe IFRS and some other local standards could necessitate a review of the engagement letter. Legal regulatory updates that can affect the engagement, tax updates, regulatory updates in the field where that client is resident could actually necessitate updates. Also, misunderstandings in prior years about responsibilities or scope that were not captured in the engagement letter could also necessitate the review of the engagement letter, because as the reviews are going on, experiences from the previous year's audit could make the auditor ask for a review to address some of the challenges that were faced during the audits of previous years. So misunderstandings could necessitate it, and also change in audit firm policies under the quality management requirements based on ISQM 1 and 2 could also necessitate a review. And this review is very important because reviewing annually helps maintain clarity, the expectation gap. This is a very vital key, and the importance of reviewing annually, very importantly. So the letter is is advised to be reviewed annually. It's not a hard and fast rule, but it's advised to be renewed annually to make sure they are still relevant and valid. It's not just a routine. It's actually part of good practice management, to confirm the terms of the engagement remains appropriate, because circumstances change, like we saw, business growth, new regulations, change in management or ownership may alter expectations. So the review is necessary because it ensures the auditor and the client remains focused and aligned with the goal, and also avoid disputes later. For example, if a client moves from preparing accounts under, like we used to have those days before the IFRS came, the SAS, Statement of Accounting Standards, before transition to IFRS, you see that the audit approach and the responsibilities will change, and the review is necessitated. This must be reflected in the engagement letter. So those are situations or circumstances that may warrant reviews. Also, circumstances that may trigger a new engagement letter may come up, because even if the review is annual, sometimes a fresh engagement letter may be required. And common triggers could include appointment of a new client or a new auditor. That would trigger a fresh engagement letter, and also change in ownership or governance structure of a company, like we saw initially, and also significant change in the nature or size of the business. Maybe the business has combined or merged or bought or acquired another company. And we saw the change in financial reporting framework, legal or regulatory updates affecting the audit scope could necessitate the drafting of a new letter. And there are benefits of annual reviews, actually, because it keeps, number one, the relationship between the auditor and the auditee very transparent and actually up to date. And very importantly, it reduces the expectation gap by clarifying the rules, the new rules and responsibilities clearly of both parties. It also provides another benefit. It provides a clear reference point for disputes in fast-changing environments. Very important. And finally, or lastly, another benefit, I think it enhances the auditor's independence, yes, by reaffirming ethical requirements each year. Very, very key. So it's very important to have the annual review, because it's very beneficial to the auditor and the auditee. So there are maybe AAA case scenarios that could be presented. And we need to remember that while engagement letters are generally reissued each year, ISA 210 re-emphasizes or emphasizes reviewing annually. Actually, if you look at ISA 210 elaborately, it emphasizes reviewing annually to confirm relevance. So where examiners provide a scenario and ask us to state or list the annual review required, or also reissue when circumstances necessitate a significant change, we need to be clear on this very, very graphically. So the key takeaway is that the annual review of the engagement letter is like a health check for the audit relationship. Yeah, it's like a health check. Most of us do annual body checks, 6 months check, 3 months body check. So that annual review is like a health check for the audit relationship, because it ensures that as the business evolves, the agreement or the agreed terms also evolve too. So for both the auditor and the client, this review is an essential safeguard, very essential, because it prevents misunderstandings and ensures compliance with professional standards. This is very, very important and key. Okay, so that will be it on my thoughts on the annual review of the engagement letter. So, any questions, any contributions, any observations based on this third unit or this third section? Any question? Okay, I believe it's clear enough. All right, so let's look at the last section, and that talks about acceptance of a change in the terms of their engagement. Acceptance of a change in the terms of engagement. So changing the terms of the engagement letter is only reasonable and otherwise withdrawn. What do we mean? Sometimes management requests a change in the audit engagement. So, for example, changing from a statutory audit to a non-audit service like a review engagement, of course, occur. So, the auditor's responsibility should only accept such a change if it is reasonable and justified, and not simply to reduce the level of assurance or to avoid disclosure of misstatements. So this is very important. So the auditor needs to understand why and what are the motives behind this change in the terms of engagement, especially when it's coming from the client. This is key. So the auditor needs to be sure and rest assured that the reason for this is justified and is reasonable, and is not simply to reduce the level of assurance or affect the job or to avoid any disclosure of misstatements. So it must be clear. The auditor's responsibility is to ensure it's clear. And the steps the auditor should take is to assess the justification. Is there a valid reason, like change in law, a restructuring the company is going through, or new listing requirement, maybe moving from LTD to PLC? So the justifications should be assessed. Also, clear discussion with management and ensure that both parties are on the same page, and the agreement should be mutual on the revision of the scope. And that will culminate in updating the engagement letter to reflect the new terms based on both parties' agreement. And also, they need to consider the legal and regulatory requirements before acceptance of the new engagement. So, if there are no reasonable justifications and the auditor has, in her assessment, found out that the reason for this request is baseless, then the auditor must not accept the change. Because, for example, if the client wants to transit from assurance service to a non-assurance service, of course, we know that statutory audits are mandatory. So why transit from a statutory audit to a non-audit service? It's not justifiable because it's required by law for mostly listed companies, public interest companies, to have statutory audits. So where there is no justification or the client to regulators. Yes, because in a situation where this scenario I painted, an auditee wants to transit from assurance services, which is a mandatory audit, to a non-assurance or non-audit related service. The reasons may not be tenable, and the auditor may need to withdraw from the engagement and report the client to CAC, to SEC, if possible to FRCN. And an example is here where a company requests that the audit be converted to a limited review midway because auditors identified being concerned issues on. If the reason is to avoid audit scrutiny, then the audit must it's clear the auditor must refuse the change. Midway the audit, they decided no, they don't want statutory audit. They want, the auditor must refuse that change and insist on it. Very, very, very important. So take note of these last areas or this last unit, because sometimes during the course of an audit, the client. And there are reasons actually why changes may be accepted. Yeah, there are verifiably reasons as per ISA 210. Agreeing the terms of audit engagement. An auditor may accept a change only if there is a reasonable justification for the change, like we saw earlier. A new law emerges, mergers and acquisition, change in reporting framework. So those are justifiable reasons. And also, the revised terms are properly documented and agreed by both parties. It's very, very key. And the change does not compromise the auditor's independence. This is very important. That change does not compromise the auditor's independence or the auditor's professional responsibility. It's key. And for example, a client that used to prepare full financial statements now qualifies for or opts to prepare abridged accounts under SME guidelines. You see that here the auditor can agree to change the terms, but must ensure responsibilities are still clearly defined. So a client that used to prepare full financial statements, the example I used, now qualifies and opts to prepare abridged accounts under the SME guidelines. You see that here, for example, the auditor can change the terms, but must ensure that the responsibilities are still clearly defined. So when changes or situations where changes should not be accepted are areas where if the change is requested merely to avoid a qualified opinion or to reduce the audit work without justification, and this should not be accepted by the auditor. And if the change undermines the quality or credibility of the audit process, this must not be accepted. So, for example, management is asking to convert an audit into a limited review, like we saw halfway, or like I stated at halfway the audit, because the audit is uncovering serious control weakness. I mean, that request to convert an audit to a limited review should be rejected immediately by the auditor. Very, very key. And the auditor's responsibility is to, in such situation or such request arising, is to assess the reasonableness of the request and also discuss this request with management or those charged with governance. And if it's reasonable, issue a new engagement letter reflecting the revised scope. And if the change is unjustified, the auditor should continue with the original terms, or if the client insists, he should withdraw from the engagement. Yes, withdraw from the engagement and report the client to regulatory authorities. Very important. So for questions that could arise in these guys, the justifiable changes or the requests that are justifiable could be acceptable, while questions around unjustifiable changes like avoiding audit qualifications must not be accepted. So where there are justifiable changes, well, there could be new terms or new engagement letters to this effect. So the key takeaway is that, or the key point we need to note in this unit is that acceptance of a change in the engagement terms is not automatic. We need to take note of that. Acceptance of a change in the engagement terms is not automatic. So the auditor must protect their independence, or the firm must protect their independence and uphold audit quality should be the main goal. And only justified and reasonable changes should be documented and agreed upon by the auditor. And anything that looks like management trying to escape scrutiny or an unclean report should be firmly resisted by the audit firm. This is very, very important. So let's take note of this as we understand the key issues around acceptance of a change in the terms of engagement. So any question, any contribution, any observation based on what we've just discussed in this last section? Because this is the conclusive section on Unit 4 before we review the chapter. Any questions? Okay, so I believe this is clear. We'll be sharing the slides after the class so that we can go through it when we are going through the video, and also ensure you go through those materials we provided and also the study text to understand and get more clarity on the chapter 5 we just look at. So before we go to chapter 6, you need to understand and be able to answer that you've understood and described the components of the system of quality management applied to firms of chartered accountants performing audit and assurance engagements. This is very important, that you decipher and comprehensively understand what we've spoken to, and also the process around changes in professional appointments, including the legal, commercial, and also the ethical considerations. You need to be sure that you understand these concepts practically. And also the application of ISA 210 in agreement or agreeing the terms of an engagement. So that's generally what you need to be sure of before we go to the question and answer practice based on what we've looked at in the general chapter 5 on practice management. So we need to be sure and we need to ensure that we solidly have a grasp. And the questions will be coming to test that in the next class. So please ensure that you understand these nitty-gritties so that when we are reviewing questions and answers, they will resonate with you very practically. So any questions as we begin to round up for the night? Any questions, any concerns generally around the practice management topic, chapter 5 we just looked at? Any questions, please feel free to ask and share your thoughts, please, very freely. Any questions, any contributions? Okay, so summarily, before we round up, we still have some minutes. You'll see that chapter 5 deals with generally practice management, and it focuses on how audit firms organize and manage their professional responsibilities to deliver quality services while remaining commercially viable. This is very important, and it's very key to note that we focused on today's class speaking to engagement letters and the objectives, speaking to the agreement on the basis of the audit, and the aim is to reduce expectation gap like we saw. And the content of the engagement letters center around the scope of work, the responsibilities of the auditor and that of management, the applicable framework, the forms of reports. We looked at the annual review. The engagement terms should be reviewed yearly to, like we said, reflect changes in business laws or standards. We also saw the change in terms. We said the change in terms is only acceptable if justified. So, for example, a new reporting framework is adopted and is not acceptable if meant to avoid qualification. So we saw that in summary, and we spoke to generally obtaining professional work. We said firms may obtain work through referrals, through networking, through quality reputation and professional conduct. We also spoke to integrity and independence must not be compromised in our quest or in the audit or the auditor's quest to obtain professional work. We also spoke to advertising and publicity, and we said it's permissible if it's fair, if it's honest, and it's not misleading. And we said we should not discredit other firms Advertising and publicity should not culminate in discrediting other firms or create unrealistic expectations in their proposals, in their bid for jobs or for audit clients. We also talked about fees. We said fees must be transparent, must be fair, and reflect the scope of work. And contingent fees, like we said, for audit engagements are generally prohibited. And we spoke to fee dependence on a particular client. So any fee greater than 15% of the total revenue of fees collected by an audit firm creates self-interest threats and needs actually appropriate safeguards. We also spoke to tendering. Speaking about tendering, tendering is competitive bidding for contracts or clients. And we said firms should ensure tenders are professional, they are realistic, they are realistic, and they maintain independence and audit quality. Very important. We also said credit control within audit firms should ensure that proper systems to collect fees promptly are installed. And also outstanding fees under that credit control we spoke about may create a self-interest threat, speaking about akin to a loan from a client. And we said the policies of the firm should avoid financial dependence on clients. Is very important so that the output and the outcome would be very, very objective. So initially in the first unit, in the first class, we looked at the professional and the regulatory framework updates, which transited from ISQC 1. ISQC 1 was replaced by ISQM 1 and 2. And we said the ISQM 1 focuses on quality management system at the firm's level. And we said ISQM 2 speaks to engagement quality reviews. And we also talked about ISA 220 revised. We said the auditor's responsibility for quality at the engagement level was clarified, and it now drew attention to the greater emphasis on risk-based proactive quality management rather than the reactive compliance quality control that the ISQCs initially provided. So, key takeaways for this practice management chapter is about balancing quality, ethics, and business sustainability. So exam scenarios may test how firms set policies around fees, tendering, and publicity. Also, questions or scenarios may test risks when procedures, for example, engagement letters, credit controls, are not followed. And also, exam scenarios may test the application of ISQM 1, ISQM 2, and also revised ISA 220. So it's very important, in summary, that we understand that a well-managed audit practice safeguards independence, delivers quality, builds trust, and also ensures commercial viability. This is very, very important. And that's the summary of practice management based on chapter 5 of the AAA subject. Okay, so that's my general thoughts on the summary of what we just looked at. Before we go into the answer and question and answer sections on past questions on the Pathfinder, like I said earlier, we will not be looking at the ISQC's questions that were tested between November 2014 down to May 2025. We'll be expounding that. So we'll be looking at questions more on ISQM 1 and 2. So wherever there are questions around ISQCs that were tested in the previous dispensation, we'll replace them with ISQM questions. And there are a lot of questions from ACCA past questions, ACCA study texts, and several sources that we could get because this is the first time ICAN is going to be examining ISQM 1 and 2. So we should expect questions around this topic, actually. All right. So, ladies and gentlemen, any questions and any contributions? Because we'd like to shut down, even though we have 4 minutes more. So, any questions, any contributions? We've been unusually quiet today. Where is AA? AA1 and 2. Okay, I can see AA2 on the call. Julie has not been. Julie used to be my breaks before. She just say, stop. Julie has been quiet. I think it's only Samuel that spoke today. UK, I didn't hear UK today. Hassan, all the class engagers. We are quiet. We are tired. It's weekend actually. So most Saturdays are for washing, for weddings, for other outings. It's like the engagement is low today. Very few people engaged. Okay. Well,
I think the everything is clear. If you see that people are not ready to ask question, it means that everything is very clear.
to Alhamdulillah. Alhamdulillah, I'm happy to hear that.
Yeah.
I'm telling you, Wala, Alhamdulillah, then we thank God. That's very good to hear if everything is clear then.
Definitely. Maybe I will get to know more when we start the question sessions.
Okay, the question and answer sessions. All right. Yeah. That'll be very good then. Thank you for that feedback. At least I'm glad I'm not speaking to myself, so it's good. Thank you so much, Hassan, for the feedback. All right. So we have 2 minutes to go. If we don't have any other question, I'll call it a good night and say have a lovely Sunday. See you guys on Monday at 8 as we continue with our conversation on the past questions and answer. All right. Good night.